I took this trade by doing a top-down analysis on 3 important market timeframes and structures using a unique day trading strategy. This and many more pro informations I will be teaching you in this video. As you pay full attention to the details I will be illustrating to you. If you want to know your true direction in trading, there are some steps you must follow to help you identify potential market trend reversals and also give you an edge on making more money on your take profit levels. Top-down analysis gives you a bigger picture on what is really happening on the smaller time frames. Traders who take their time to do this will always be one step ahead of other traders who trade only based on their perspective of what is happening on the smaller time frames. But why must you do a top-down analysis before trading? Doing a top-down analysis will make you see ahead of the current market movement and help you to avoid some kind of trades that you will take and make a loss on a normal basis when you have not seen the storm from afar. It helps you identify the major trend of the market, whether it's in an uptrend or it's going down in a downtrend. Knowing the overall direction of a trend places you 10 steps above every other trader. It's like the way a tree forms. First of all, it starts from the root, then it expands to branches, and lastly the fruits. We use 3 time frames to do a top-down analysis on market structure. The big time frame, the second lower time frame, and lastly the sniper entry smaller time frame. Get your mind ready and be at alert. Every part of this video is like a step to your success, and you should not miss any step of it, because each part of this video is as important as every other part of the video, so follow carefully so you don't get lost on the way. If at any point of this video you have a question, feel free to drop them in the comment section. In this video you will learn 1. How to know the overall direction of a trending and range movement. 2. How to draw out the right areas to trade in the market from the higher time frames. 3. The right strategies to trade when the market approaches those areas on the smaller time frames. How to know the overall direction of a trending and range movement. For this video I will be showing you how to do a top-down analysis for day trading, and you can also do the recommended reverse shown at the end of the video for swing trading if you are a swing trader. For our day trading analysis, we would be making use of 3 time frames. The first time frame is the daily time frame. Then we go down to the 4-hour time frame, and lastly the 1-hour time frame to spot our entry. When you are on the daily time frame, first you look at the market and check those areas where the market is respecting and creating great movement. This is where you start looking for a trend movement, support and resistance, or range trading. After carefully spotting that movement, then it's time to draw the support and resistance or trend lines on it, according to what you see on the chart at that moment. How to draw out the right areas to trade in the market from the higher time frames. After spotting those areas where you can draw your trading tools on, which are those areas of support and resistance and those trending areas, then it's time to draw them out. Before drawing your support and resistance on those areas, you must make sure there are evident movements from those areas where you are drawing them on. Don't guess it, they should be bold enough to be read on the chart. This means that the market must have done a very good movement for at least 2 times on a support or a resistance zone. This will give you more confidence and assurance of the market coming back to that particular zone. If you are drawing a trend line, you just make sure that the market has traded beyond the last move of the first trend line formation. That's what you do on the daily time frame. Now it's time to move down to the second lower time frame, the 4-hour time frame. In the 4-hour time frame, You are beginning to understand the market in a broader view. This is where you look out for chart patterns and watch how the market approaches those areas. You have drawn out, very important, because here is where you strategize and wait for movement. For a support and resistance zone, I recommend you wait for a double top or double bottom. If you don't know how to trade them, you can go check out our video on how to trade double top and double bottoms the pro way in order to learn more on it. Trading the trend lines is easy. All you have to do is wait for the price movement to approach the trend line. Then you switch to the smaller time frames to look out for entry candlesticks. The right strategies to trade when the market approaches those areas on the smaller time frames. There are different ways to trade the smaller time frames in order to get a perfect sniper entry. One of the best ways to do this is by waiting for a perfect independent pin bar to appear on the trend line. What we mean by a perfect independent pin bar is that the pin bar must appear at the top of the approaching price movement and not inside the tiny movement round the price movement approaching the trend line. For the double top or bottom pattern, you should look out for a momentum candle appearing at the second low or high of the formation. This shows that the market is ready to push price to your target direction. After these steps have been met, you can now comfortably enter your trade. You can combine other strategies in trading the entry part, but these are the very important expectations to look out for in the market. Let's take another example. We are looking at the daily time frame of gold. See the market retracement on the resistance turned support zone, marking the area so we can check out how it looks on the 4-hour time frame. Here you can see a very wide double bottom which came from the daily time frame. Based on the confirmation that the double bottom has now been well established, we are now looking for an entry on the 1-hour time frame. We are now on the 1-hour time frame. See how big the double bottom has become. A normal trader that did not do a top-down analysis from the daily time frame will look at the chart and think the market is heavily reversing for a strong downtrend because they don't understand what is happening. But for those traders that know what is happening on the chart, that group of traders, which now includes you, understands that this is just a little double bottom retracement and you are expecting a signal entry to enter the market and make huge chunks of profits out of it. If you look at the chart, you can now see a momentum candle showing at the low of the double bottom. A momentum candle is a candlestick with more body than wicks. Spot it right now at the low of the chart. That's perfect entry. From there you can take the trade and place your stop loss a few pips below the momentum candle and place your take profit target at the next significant high. You can see the type of price movement you will get. If you do this top-down analysis correctly, it's very massive, and you'll be risking lower if you take the entry from the smaller time frames. These 3 top-down analysis can be repeated on other different settings like, for a grand trader, you can make your settings monthly, weekly, and daily time frame. For a swing trader, you can make it weekly, daily, and 4-hour time frame. For a day trader, you make it daily, 4-hour and 1-hour time frame. The lowest you can go for day trading is 4 hours, 1 hour and 15 minutes trading. You should master only one time frame settings for yourself, depending on your patience and trading account. Someone with a small portfolio should not go trading with the big boys in the swings or the grand traders. Those ones are moving with a big chunk of money in their trading accounts. Their stop loss alone can cover the take profit target of a day trader. Make sure you consider your account balance before choosing the right time frame settings for your trading account. Practice it more often. This is very important to get used to that right time frame settings, which you have already chosen for yourself. Understand that the higher the time frame, the higher the profits, and also the higher the loss you will impose on your account. Stay guided by following all the rules, strategy and psychology you have received in this video. In a very short time you will begin to notice how profitable you will become as you follow them and practice them more. It will make you millions in the best time to come. In our next video, I will be explaining in depth on how to trade the trendline breakout strategy. Subscribe to this channel right now so you don't miss out on it and other future strategies. If you need a Forex mentor that will personally mentor you one-on-one, check the description box below for a link into his Telegram channel. See you in our next video.